substance over form over substance has been caused by many factors. For example, bank regulator and Islamic bank also operate under central bank regulations. They have their effect, risk mitigation, tax rules, where some favorable treatments is given to interest rather than rental income and other incomes, and the pricing of the product so that it is competitive in the market. All those have really affected the principles of the Shari'ah or the development of Islamic products, so that have taken shape into the form of debt instruments, even though they were called sale contracts, ijara contract, or partnership contracts, and in fact wakala istismar. And we saw how those have been affected even the court proceedings or court litigations. So, but the biggest thing I think, even if we take or convince or have a country where all the jurisdiction, all the laws, tax laws, regulatory laws, and all those laws do allow Islamic finance, there still remains a question, and that is, what is the attitude of time value of money towards time of Shari'ah? Is it acceptable or not? If it is not acceptable, then there is no room for Islamic finance. Because this is what Islamic finance or Islamic bank is doing. We are developing product where the markups, whether we call them rent or markup or whatever, are really all calculated based on the time value of money. If that's not acceptable in Sharia and that's haram, then there is nothing left. And if it is acceptable, then let's say that it is part of the Sharia. And alhamdulillah, mudaraba and musharaka is live. It's flourishing. For every bank, and there are 7 I think in Saudi Arabia, there are maybe 7,000 musharaka and mudaraba are taking place. So what we are insisting is that banks also should do mudaraba and musharaka. Why? Because there is this perception that what the banks are doing today is not halal, is not haram. And that's what has really led to sort of dressing up time value of money under the name of various different contracts, which cause additional risks and additional costs. So just to take one example, and I want to compare it with murabaha, with deferred payment sale. The murabaha in the early Islam, been written about it, in Mudawwanat Imam Malik, was basically one of the buyu'ul amana, the trust sales. There were 3: murabaha, tawliya, or wadi'a. In murabaha, the seller, the merchant will say, I bought this horse or camel for 90, but I'll sell you for 100. Murabaha. Tawliya, he said, I bought it for 90 and I'll give you at cost, at same price. Or wadi'a, he will say, I bought it for 90, I'll give you at a discount for 80. But those prices, 80, 90, or 100, they were market values of the item at that time. He must have been giving a discount for a reason. The whole purpose of murabaha at that time was to assure and comfort the buyer from the real worth or the value of the contract, of the item that he was buying. Because he could have been first time in the market buying a horse or a camel. Or if it is me today, I will say, me going out and buying a carpet. I really don't know the difference between $100 carpet and $1,000 carpet. So he was using this disclosure by the merchant as a benchmark that if he gives me honestly the right price, then I can base my purchase price based on his disclosure, honest disclosure. And that's why it was called Bay'ul Amana. And if the merchant has lied to him, he had an option of either first cancel the deal or ask for adjustment in the price based on the extent he has falsified. So if he said, I bought it for 80, but he said he bought it for 90, but he said it was actually 80, he can get it at discount. And there is a lot of writing in the book of Murabaha, or the chapters which cover Murabaha, as to what can be included in the price when he's quoting the price. and what cannot be included, and what are the options. So suppose somebody, I went to buy a horse and I asked the merchant, and he said, I bought it for 100, for 90, and I'm going to sell it for 100. That's 10 is profit from sale, from 90 to 100. But suppose I told him I cannot pay you 100 right now. I cannot pay you immediately, because all murabaha, most of murabaha ended here. That was the end of the murabaha. The whole purpose is fulfilled now. I know what he paid, and I know how much I can pay more in the form of profit, and I pay on cash and walk away with the horse. But if I told him I cannot pay immediately, I'll pay you next year. He said, in that case, I'll sell you for 110. And this is perfectly Sharia compliant. للزمن حظ في الثمن وللأجل حظ في الثمن. So many repeated statements in the books of fiqh that on a deferred payment sale you can increase. And if I say 2 years, he will say 120, 3 years, 130, and so on. Now this is a totally separate sale than from murabaha. Today when we say murabaha, the bankers don't know the real worth of the item. It's the customer who knows before the bank what is it worth. And secondly, the profit which you add, the bank is not really the profit to make that what the banker may have bought it for less and now selling it for more to make it a market value. But it is always based on time value of money. If you don't need financing from bank, you will not go to do murabaha. You will just go and pay for it. There is no need for murabaha. So the customer, and there is nothing in the murabaha contract which says, if I, the bank, disclosed a wrong price, you can always cancel the deal. Because there is no, the whole purpose of the murabaha is not really to satisfy the customer from this work. So this bay' bil saman al ajil, deferred payment sale, is the real financing part. And it is as halal, adding more to the cash market value, as mudaraba. And in many transactions you will find the mudarabas will not suit the transaction, such as buying a house. How do you do mudaraba? Or buying a car, how do you do mudaraba? Which means being partner in the whole transaction and then getting a percentage based on what the partnership has produced and all that. So there is a need for debt instrument. And in fact, fuqaha have gone so far as to say that in case somebody has built a markup based on time value of money, let's say for 1 year, he said this is 100 cash, but I'll pay you, but it will be 110 if you pay me in 1 year, or let's make it 112. If the person comes after 2 months and say, I want to pay the debt now, the fuqaha say in Hashil Zain al-Abidin and other places that the merchant must give him a discount for the 10 months that he did not use the financing. So it's not that markup has disappeared, but it survives in a way so that if the merchant for some reason comes earlier, he is entitled to get a discount, which can happen as a result of death. As I said in the morning, death makes all the debt payable immediately. So I think what is happening is that we are in denial or hiding or covering this aspect, because every transaction really in Islamic finance ends with a debt. Murabaha, misharaka, ijara and all that. Where the Islamic financial institution conducts is investment in the financing, the money that they have, call it principal, plus a markup, which is calculated based on time value of money. If we accept this, then we will have a lot of problems and hurdles we can overcome, which results on form over substance type of transactions.